For my larger syndication deal, the 86 unit, I brought in a co-general partner, had linked up with this individual a few years ago, and real estate is not his primary business. So he's a farmer by trade, has several businesses, I think about 14 or 15 different businesses that he owns or invests in, but he has experience with syndicating deals. He did a large deal in Florida about 10 years ago. And for me, I kept hearing about syndication. I kept hearing about this idea of limited partnerships and how to put these together. I just didn't have I had all this experience in real estate, but not the comfort or experience with raising money in this manner. And even though real estate was not this gentleman's idea, he's a super successful business person. It gave me that confidence of, hey, I've got somebody on my team that we can do this together. And it was a really complementary kind of partnership. And I had to get over my own fear, my own sort of limitations in my own head. I was, opposed to partnerships for years. I just had this stigma in my mind that they didn't work. They wouldn't work. It wouldn't work out. But syndication is the perfect model for bringing in quote unquote partners. So I got comfortable with that. And it took us about a year to really formalize what our goals were in terms of how we wanted to raise money, what the first deal is going to look like. And we, initially we didn't have a property in mind. We put our PPM together and we sort of backed into it. We found just stumbled across a property that was off market midsummer. And so I knew it was the right one. I looked at the property. It fit everything we were talking about. It was large enough that bringing in some limited partners would be great. I personally invested in the deal as well as my co-general partner. So I wouldn't syndicate a deal that I wouldn't invest in on my own. So I put my own money into it. I think it was a lot easier to raise capital than I thought. I probably would have spent more time developing more of an educational presentation. What I found was a lot of the investors, they signed up, they were very enthusiastic about it, but we still have a lot of room to go in terms of educating them on things that would be really beneficial to them, like depreciation and appreciation and cash flow. And just a lot of these accredited investors that haven't invested in a deal like this before are really relying on you to be the quarterback and really relying on you to lead them and guide them. And I think that was sort of a really good lesson for me that, hey, if we were really successful on the first raise, we raised $1.5 million in about 5.5, 6 weeks. And we oversubscribed. We had to shut it off. We have people knocking on the door to invest in the next deal. But I thought, gosh, how efficient and how great could this have been if we just had really focused on the educational component of this and really provide more value to our investors.